All right. Happy Thursday to you guys. Welcome back to the Tier 1 Trading New York live trading room session. Hope you are doing well. We've got a lot of news coming out today, a lot of heavy hitters coming out this morning. We have the ECB interest rate decision in about 45 minutes. We've got GDP coming out for the dollar in about an hour from now, and then we have the ECB press conference about an hour 15. I believe that's 8:45. So some high impact news events today. Some news events where we have no idea how the market is going to react. Cody says should see some fireworks. Yeah, I want to read with you before we get into things kind of an interesting blurb about the GDP. It said the U.S. will report first estimates for third quarter gross domestic product release that may send some confusing signals. Reported GDP is set to return to positive territory with annualized growth of 2.4% in the third quarter. Although analysts argue that this is largely a statistical quirk, big inventory effects in the first two quarters generated negative GDP prints at a time when employment was growing strongly. In the third quarter, by contrast, employment growth has slowed sharply over the summer, as have real economy indicators such as retail sales. As such, market reaction will depend on the deciphering of what lies below the headline numbers. Other more real-time data due at the same time may be easier to interpret. Weekly jobless claims, which is our normal Thursday number, are expected to have ticked up from last week, while durable good orders are expected to extend a trend of underwhelming growth. And I say that all the time because one of the most frequent questions I get is about news and news and news. And even myself, I was victim of this when I first started trading, as I thought that trading news was as easy as kind of how they teach you in the textbooks, right? Good news, good result; bad news, bad result. And unfortunately, real live experience and many donations to the market has taught me that it's not always the case. It really is often the deciphering. How good is good? Can good news be bad? Can bad news be good? And all that fun stuff. Give me 1 second. You want to show me something, buddy, before you leave? Real quick. No, you can't take it to school, buddy. Plus, we gotta charge it anyway. Okay. So we gotta charge it anyway, so it doesn't die. All right. Thanks for asking, buddy. Have a good day. At least he asked. Kids want to take the Nintendo Switch to school today. He's been building these massive, these kind of Minecraft deals, these massive buildings and structures. So I'm glad he asked instead of just sneaking it to school. Then we would have had a problem when he gets back. But yeah, big news events today. So we'll see that trickle down throughout the day. Where I wanted to start with today's trade of the day is over on the good old GER30, the DAX, right? And it's funny. Most of the time, you guys see me trade Forex in here. The majority of what I trade is Forex, but we do look at other assets as well. We look at crypto and we look at indices. I personally look at indices from an investing standpoint, but I remember working with a trader a while ago who signed up for us and he was asking questions. And a lot of people are under the assumption that, hey, we are Forex traders and or Forex teachers, Forex educators. And that's not necessarily the case, right? Although my main concentration is Forex, Jason Graystone's main concentration is Forex. What we do is we teach the skill of technical analysis, right? We are chartists. We teach you a skill that can be used in any market and in any time frame. And that's one of the luxuries of what we do. A good example, Darren, for example, mostly trades in markets outside of Forex, but uses the same technical skills that we teach to decipher and find opportunities. And I was working with a trader who traded the DAX, and that's all he traded. And I had never looked at it until I met him, and we were going over, trade plan reviews and different setups, sending me charts, all that fun stuff. And ever since then, I started following because I noticed that it worked extremely well with my trading style. And what I mean by that is this, right? Not every market is going to work well with how you trade. Not every pair, even within like a specific market or symbol within a specific market, is going to work well with how you trade. Everything has its own personalities, and sometimes personalities mesh, sometimes personalities clash. I'll give you a great example, right? If you are someone who has adopted a trend continuation style, a style that needs directional movement, right? In order to benefit and profit, if you attempt to trade something like the Aussie Canada or the Euro Pound, right? We know those pairs typically just go sideways, right? They do the little wounded crab shuffle. You're not going to have much luck trading those pairs. So those pairs, those assets don't have the personality that meshes with your trading style. So it is important to understand that. And the DAX works really, really well with my trading style. And one of the things that I've noticed on the DAX, which I don't see as frequent on under other indices, are advanced pattern formations. That's what we're going to look at today. But first, I want to give you kind of a short history of this. If you just look in the recent, let's just say this year, and this is on the daily chart here, right? I'll give you guys a second to stare at the chart, right? Do you guys see any advanced pattern formations, harmonic pattern formations? If you guys are new, you don't understand what a harmonic pattern formation is, or we call them advanced pattern formations. There are multi-legged moves in the market. It's funny, we actually had the conversation the other day. I may share it on YouTube this weekend, but we had a conversation about institutional traders and how they kind of, I don't want to say manipulate, but how they can influence and bait retail traders into doing certain things. And that got onto the subject of how advanced patterns and whatnot actually form because of the buying and selling habits of these institutional traders. Again, I may put that on the YouTube channel this weekend, all depending if I have time to record a new trading edge or not. But if we look at this kind of just briefly and we draw some of these things out, we have one right here, X to A to B, B to C, C to D, right there. We have another one right here, X to A to B, B to C. Our C to D was actually about right here, right? And then we recently had another one in the form of a butterfly pattern, X to A to B, B to C, and a CD completion right down here. So we got three patterns back to back to back here on the daily time frame, and we're setting up a fourth. So if we take a look at our recent swing, I got the question on YouTube the other day, how do you identify an X leg? Oh, I forgot to make it so you guys can see who's talking. There we go. Sorry about that. Thank you, Chris. How do you identify an X to X leg? And there's no magic kind of formula to doing so. It goes back to what we spoke about earlier. The basic skills of reading a price chart, the basic skills of technical analysis. If you know how to analyze a trend or identify a trend and read the ebbs and flows of the market, you'll be able to identify those legs. This is why when we do our coaching, when we do our teaching, we don't start off with saying, hey, here's how you identify X to A legs. Here's how you identify advanced patterns. No, we start off by the simple ebbs and flows, new structure low, outside return, new structure low, outside return, new structure high, outside return, drawing this stuff over and over again, right? Until it stands out in your head. And why is that important to learn first? Well, because as you go on to trade other things, whether it's patterns, whether it's, a million other things, whatever else you can name, this is going to be the foundational element of what you start with. So this last swing high to swing low, this outside return to new structure low right here, right? This is going to be my X to A leg, right? Is the starting point of my potential pattern formation, right? We can label that X, right? So I know with patterns, these are harmonic-based patterns or Fibonacci-based patterns, right? They need to hit certain Fibonacci requirements, which means I need to know how to properly use my Fibonacci tool. If I can't identify this first leg, I can't properly use my Fibonacci tool. I can't draw it from the right place. And trust me, I've seen some weird things of people drawing it from different places, right? So we draw it from our swing high to swing low here. We know that we have different requirements for whatever pattern formation we're looking at. This one, our B leg hits the 50%. Draw this down a little bit. It's a little loose with it, but it does hit the 50%, right? So we know that's a bat pattern, and then we can finish off the rest of the pattern. X to A to B, B to C, and we know our D completion is for the bat pattern specifically is right up here at our 886. And that zone is going to be from our 886 Fibonacci retracement to our X leg. Now, what's interesting about this, and we don't talk about it too much because I don't personally trade it this way, but I trade patterns aggressively at the completion point, right? They're the only things I trade aggressively in my kind of portfolio of strategies. And what I mean by aggressively is that once I have a pattern completion price, I simply put a limit order there. So I put a limit order, in this case, a sell limit order at wherever the completion price will be. I don't really care. There's no entry signal. There's no other confluence. As soon as that price is hit, boom, I get involved, right? So it's going to end up looking something like, let me just measure this out real quick. End up looking something just briefly, short position, something like this, where in this scenario, I've got a target down here, at least initially, and I've got a stop loss above this X leg right there. But that's not the only way you can go about trading these things or entering these things, right? You can use them as like a part of your CTS score, right? The CTS score, that's the combined technical scoring system where you're looking at different elements, giving yourself a point score, quantifying your opportunity. That way you stay consistent. And you can say, hey, I've got an advanced pattern, right? I'm going to take my 3 points for the advanced pattern, but I'm also going to do more analysis and see, is there a specific place within that kill zone that I want to enter, right? The same way that we would do normal analysis on another type of trading situation. Hey, welcome. By the way, if you guys are here, do me a favor, support what we're doing here at the live stream, hit that like button. And as always, don't be shy about asking questions or leaving comments, anything like that. So a few things I can do to pinpoint this area is this, right? I can look at this last move, right? Because we had a few ebbs and flows, right? The C leg, the C to D, or the C to potential D, didn't just go straight up there. It ebbed and flowed a little bit, right? So I can take this move right here, treat this like a regular AB equals CD pattern or a one-to-one measured move, right? Copy and paste it, plug it on here and say, hey, you know what? If we get a one-to-one measure move, that one-to-one measure move is going to complete a little bit higher in this zone. I can pair that with a Fibonacci extension, right? Swing low to swing high, that A to that B of the one-to-one measure move and back down. You can see I have a 1618 Fibonacci extension lining up that AB equals CD pattern. I can also take a Fibonacci retracement from our bigger move here, right? We have this last swing right here, but the real technical swing high or outside return to new structure low is going to be this leg right here, kind of this complex extension. And you'll see that I have a 786 lining up in that direction as well. So we're at that area as well. So if you're someone that's not aggressive with patterns and you want to pinpoint an area on where you can take the trade, right? You don't have to just rely on it as a pattern and say, hey, here's the pattern completion. I'm going to enter right here. You can use the pattern to create kind of your kill zone. Because again, price action doesn't have to reverse right after pattern completion, right? It doesn't have to come to the 886 and turn around right away. Sometimes it does, but plenty of times it plays around in that area, it probes that area, right? We saw the other examples on your chart. I think only the butterfly turned around perfectly. The rest took you for a little bit of a dance first. So you can kind of dial down on this zone. And if it gives you a better entry reason, right? Maybe you get a better opportunity to trade. Maybe you take something where your initial risk reward looked like that, right? Again, that's loosely drawing it off. I didn't really do the stop loss the right way, but just doing it real quickly. But maybe you find yourself a higher entry. Maybe you give yourself your same stop right there because the stop is not going to change no matter what. Targets will change a little bit because you'll have to roll these up a little bit. But you can see that you can put yourself in a slightly better situation with that higher entry point, whether it's aggressive at that area or whether you're waiting for a specific reason for entry. Now, obviously, there are pros and cons, right? The pros are that, hey, you get a better entry, you have less risk, you have more reward. That's all good. What are the cons? What are the negatives of entering higher, entering beyond the initial completion zone? Well, the cons are that you may miss the trade. If price indeed does go exactly to that 886, and if it does turn around and bounce, it's going to bounce and move, and you're not going to be involved. And it's important to understand that with trading. So many traders get in trouble because they want the best of both worlds. So many traders want the best of both worlds. They want all the good, they want none of the bad. And the reality is, everything is a give and a take. Everything is a trade off. To get something, you must give up something else. No matter what you're doing, whether it's aggressiveness with entry, whether it's aggressiveness with position sizing, whether it's deciding what days and what hours you trade, right? You want to capture every trading opportunity in the world. Guess what? You'll have to give up sleep. You want to sleep longer? Guess what? You'll have to give up trading opportunities. So it's always a give and a take. And the key is finding that balance within yourself, like anything else in life. Where is that kind of middle ground where it's worth it? Right? Just like a job, right? Some of you guys may be currently going to a job that you hate, but it pays really, really well. So you're willing to kind of torture yourself in a job that makes you unhappy because of the paycheck. But if they ever reduced your paycheck, if they ever said, hey, we're taking a pay cut and we're going to cut you down 25%, now all of a sudden the pleasure from the paycheck doesn't outweigh the pain of the job you hate. And now you're in an opportunity where you may have to make a decision and find something else that better suits that balance. So it works into life as well. Chris says I have to give up more sleep. I gave up sleep when I had kids. I didn't know that part of the deal, and then it was too late. No one read that part of the contract to me. And then I'm like, well, can I get a redo? And they're like, nah, that's not how it works. That's not how it works. So, real quick, YouTube, I noticed that give and take when adding filters to my strategy. I've eliminated some losers, but have also eliminated some winners as long as one outweighs the other. Yeah, it's a very good point. Because when you're doing your back testing or strategy development process and you're adding filters and you're trading things, a lot of people will add filters or make tweaks to indicators in order to, eliminate losers, right? It acts as a filter where it takes out some of the losers. Well, what you got to realize is it's also going to take out a lot of the wins, right? And the key is, like you said, you got to find that balance. Are the losers that it eliminates worth some of the collateral damage that are the wins that it eliminates as well? And if it's yes, then it's worth it. If it's no, then it's not. And I've had strategies that I've tested before where I've hit at like 50% on the initial test. And then I added a filter, and that filter took me to 60%. And I'm like, ooh, baby. But it produced less money. So I eliminated more losers, which bumped up my win percentage, but I also took out a lot of those big wins, which killed my expectancy or my profitability in general overall. So it's always an interesting dynamic. The problem is most people don't take time to test that type of stuff, so they don't actually know it. They just make a tweak and it looks good on the individual trade that they're taking, and then they start trading it live and they start losing money, and then we repeat the process. People don't do things the right way. That's just, unfortunately, that's the trading world. That's why we see such a high failure rate, because people don't put in the work, and they just kind of move on to the next thing really, really quickly. But yeah, give and a take is for real. Trading, life, business, whatever it may be. So cool. So that is the trade of the day for today. So live streamers, I'm going to boot you off. Thank you for joining once again. Hit that like button before you leave. We also have that 14-day trial membership, but we have a November 14th. We have that free trading workshop coming out called The Truth About Trading. So I have the registration link. I don't know if it's on the website yet, but it will be there soon. So make sure you sign up for that. Free, online, 1 week. Be there. Live rumors, as I mentioned before, we've got some heavy news coming out in about 25 minutes. We've got an interest rate hike